This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's schedule of events for January 13th. The main indicator for the day is out already, China's trade data. The nation's exports fell only 1.4% year-on-year in December, against market expectations of down 8%. In yuan terms, exports actually rose. Imports also fell by much less than expected. The result was China's second largest trade surplus ever. The news suggests that the fall in the yuan that began in August may be starting to boost exports. Personally, I'm not so sure that this signals a turnaround for the Chinese economy, as global trade is falling all around, but it could mean a slower decline than the worst-case scenario that many market participants are worrying about. That could be good for risk sentiment and support the Aussie dollar and the Kiwi and global stock markets, while being negative for the yen and the Swiss franc. As for today's indicators, this morning we have EU industrial production for November. Industrial production rose month on month in October, but it's expected to fall back slightly in November. It's expected to be down 0.2% month on month. Some of the declines due to the unusually warm weather, which has reduced demand for energy. In any case, the output component of the Eurozone manufacturing PMI rose in November, suggesting that the upward trend is intact. And so I think even a modest month-on-month decline in the actual figure would probably not have that much impact on the euro. Now, that's basically it today for the economic indicators. We do have two Fed speakers, Boston President Rosengren and Chicago Fed President Evans. Rosengren's a new voter on the FOMC this year, and so people will particularly want to hear his views. So far, he's taken a fairly dovish tone. Evans is even more dovish, though. He wanted to delay hiking rates until this year, although, of course, in the end, he went along as the vote to hike in December was unanimous. In any event, the market will want to hear what these two say as a measure of what the dovish extreme of the FOMC is thinking. The Beige Book will also be released later today, ahead of the January 26th-27th FOMC meeting. Then overnight, Australia will release its employment data for December. Employment picked up in November, but the market expects to see some deterioration in the employment picture in December. This is important because the RBA has never cut rates with employment improving. A deterioration, on the other hand, could increase speculation about another RBA rate cut and put downward pressure on the Australian dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.